Hello, everybody. My name is Graham Elwood, and you are watching The Political Vigilante, now with more Bitcoin. You have been orange-pilled. Bitcoin's a cult. I'm a crazy Bitcoiner. Satoshi has gotten my brain. No, it's just perfect money. It's perfect money. And so there's a bill being introduced, SB 121. We talked about that in another segment. And we just had the halving April 20th. And we are going into a bull run. There's been a little bit of a pullback. The price today is about, 64,000, something like that. We had an all-time high in March of 73,700, somewhere in there. And as more people get into the Bitcoin space, and I really need you to understand, Bitcoin is digital gold. All the other cryptocurrencies, Ethereum, all the other ones, they are digital stocks. They're like securities with boards of directors and CEOs, and they can be corrupted and arrested. And Bitcoin is digital gold. And more people are realizing the power of Bitcoin. And one of the things that it is attracting institutional money into Bitcoin is that the percentage of Bitcoin owners are what's called hodlers, meaning they're holding it for a long time. Somebody just misspelled hold, HOLD, and they spelled it HODL. So now it's called HODL. That's literally how it is. Like if you're goofy foot in surfing or skateboard or snowboarding, it's literally because a Walt Disney movie in the 60s or 50s had the character Goofy surfing with his right foot forward, and they call that goofy foot. Like that's how crazy. That's how this term HODL comes about. Just a quick history lesson. So what is significant here, and this is a tweet by a friend of the show, Max Keiser. Demand shock means supply shock. God candle coming in 220,000 in play. So what he's retweeting is this tweet from Vivek. Held on exchanges is hitting an all-time low, right? So what this is, if we push in here, this line is the Bitcoin price, and this blue line is the amount of Bitcoin being held on exchanges. So this goes to January 2023, right? We had a large percentage on exchanges. As the price has gone up, January 2023, the price was the total number, right? So the Bitcoin price was under 20,000 in January 2023. So as the price has gone up here, the amount of Bitcoin on exchanges has come down. Now, what does that mean? Why is that significant? The only reason to keep Bitcoin on an exchange is if you're going to trade. You're either going to cash it out for US dollars or whatever to pay bills or whatever, or you're going to buy, sell it, buy it, sell it high, buy it low. Or so when people pull it off of exchanges, that means they're holding for the long haul. Which, again, we've talked about this. After every Bitcoin halving, there is a 12 to 14 month bull run. So the last Bitcoin halving was in May of 2020. The Bitcoin price was about 8,500, 8,900. It was under 9,000 a coin. By April of 2021, a year later, it had hit its all-time high of 68, 69,000. That's basically an 8x, right? The previous halving in 2016 had a 10x. The previous halving in 2020 had a 20x. So the price, even if it just does a 4x, that gets us to this 220,000 that Max Keiser is talking about. And that's why the bulk of Bitcoin owners are holding. They're pulling it off of the exchange, which is something I always encourage you to do. If you buy Bitcoin, get it off of the exchange, do self-custody on a cold wallet. Okay? So this is a bullish sign, and it is significant, right? And then there is this. What Michael Saylor said. Saylor calls Bitcoin property, not money or currency. He also realizes that can't work over the long term. The fiat system relies on people saving in it by buying government bonds. The government needs people and entities to continue lending their excess capital to the government in exchange for an interest rate that lags inflation. The term for this is financial repression. Inflate the money supply at 8%, pay the lenders 4 to 5% interest in order to inflate their debt money. Steal 3 to 4% of the purchasing power of the savers each year to accomplish this, right? The fiat system relies on theft. If no one saves in the currency, then the government has no way to inflate their debts away. In other words, they'd have no one to steal from, and the currency would have no value. The reason it would have no value is because money printer would be borrowing even more than it does now. If no one saved in fiat, then government debts would have to be financed entirely by central banks, which would have to print the money to buy government bonds. Those proceeds pay for government expenses. Governments spend that money into the economy, hyperinflation would ensue. If Bitcoin is the property that people prefer to save in, and if that behavior becomes widespread, then fiat will collapse. Saylor understands this when he suggests that Bitcoin will live alongside fiat currencies. This will be true for a period of time, but not in the long term. Saylor is painting a non-controversial view of Bitcoin for the mainstream media. He knows that Bitcoin will eventually swallow all fiat currencies over a long enough time horizon. So if you watched the episodes I did when I was in El Salvador with Max Keiser, he talked a lot about this. This is the scam of the Federal Reserve. It loans money to, somebody like a corrupt person like Jamie Dimon that helped finance Epstein at JP Morgan Chase at whatever 3% that they said there, and then they loan it back to the Federal Reserve at 5%, and then that's how they make their money. It's a scam, as they pointed out there, and it's dependent upon regular people, regular Americans saving their money in fiat, in US dollars. I'll just use United States as an example, but every nation state, this is similar. The euro, the Aussie dollar, the Canadian dollar, whatever. So if everybody starts saving their money in Bitcoin, holding on Bitcoin, which I showed you that chart, people are not keeping it on exchanges because the exchanges are like banks. They can gamble that Bitcoin away. If you keep, let's say, whatever, I'll just use this round number, $10,000 in Bitcoin on an exchange, they can lend that out and whatever and use that for leverage. If you buy your Bitcoin and put it on a cold wallet, then you basically take the power away from the central banks. It's another reason. The main reason you want to put your Bitcoin in self-custody in a cold wallet is so that they can't steal it, take it, whatever. But also, it helps they have no power. You own your Bitcoin. They can't take it. They can't lend it out, borrow against it, whatever. Only you can do that. That's why Michael Saylor says, don't sell your Bitcoin. If you got to pay bills, I get it. But even if you got to do that, just sell as little amount as possible. Use some Bitcoin in a circular economy. Like when I was in El Salvador, I was paying for a lot of things in Bitcoin. That's good. I get paid. Some of my pay comes in a cryptocurrency, the Rockfin, the Ray token from Rockfin. I converted that to Bitcoin when I was down there, and I would pay for things. Down there. I convert some of that to Bitcoin. Some of it I have to convert to fiat to pay my bills in the States. But that's how you get to do that. Circular economies are good. You support using Bitcoin to support, and then your savings, your investment, your assets that you hold on to. Fractional reserve system requires retail banks to keep 10% fiat they lend on hand. So every dollar you have in savings allows them to lend 10x minimum. Sometimes they do 20x, but that's a great point. Follow the money, connect the dots, get the truth, and shave your knuckles for justice. Thanks for watching, everybody. Boom.